Welcome to the Midwest Moguls Show, where we talk all things business, real estate, and entrepreneurship. Let's dive into today's episode and make business enjoyable again. Welcome back to the Midwest Moguls Show. We are back in the studio. We have Tom Seaman in here for the first time, the world-renowned mortgage lender, absolute badass real estate investor. But Tom, fill us in a little bit on who you are, what you do, where you're from, and then we'll kind of just take the conversation from there.
Sure. Tom Seaman. Been in the lending world for 23 years.
Holy crap.
Yeah.
Dang.
I didn't know that.
Yeah. Started in fourth grade, so nice to so I've been in 23 years. And recently started getting investing. About a year and a couple of months ago, we bought multi-storage unit property, and then bought a property in Florida this past year.
Oh, shoot. That's sweet.
Yeah. Yep, down in Nellis Park, area. So, and we're looking to grow that. Some more investment properties coming up here in 25, and maybe some business opportunities in addition to that. So
sweet.
Awesome.
And what got you in? So you said 23 years ago. Did you get into lending right out of college, or just about?
About a year or two. Yeah.
Dang. So you went through the entire recession, and were you like for the last 23 years? It was lending 100% to the core throughout the recession, throughout the ups and downs, everything like that. Did you ever do anything on the side, or?
Yeah, pretty much lending. I took a little hiatus to dive into the opportunity of being a financial advisor for about 6 months, and just wasn't the jam because I called all my past clients, and they're like, well, we miss you. Who are you going to work for the mortgage perspective, right? So after hearing that about 100 times, I'm like, better go back to what I know. So
it's definitely, that's an interesting thing. And what was it about the financial services business that you didn't enjoy about that versus like the mortgage lending? Why'd you come back to mortgage lending?
Well, I love the financial services industry. However, I was in the mortgage industry priority for 10, 12 years.
Oh, shit. So then you had the past clients, you had everything.
So many clients that I reached out to, they already knew me as their mortgage lender. So therefore, they already had the advisor part wrapped up. So it's just hard to crack that nut. So it's like, go back to what I know, and I was good at it. So I was just getting a little burnt out. So it was a good idea or a good opportunity to take a step back, reflect, and you know what?
That's so interesting.
And curious, like what degree did you then graduate with?
Sure. I was at UW Oshkosh, graduated double major in marketing and finance.
Oh, nice. Yeah. Nice. Dang.
Do you you don't need any degree to get into mortgage lending though, do you?
No.
That's what I was.
It's like the Wild West.
Yeah. That's what I was trying to get at. It's like figure out, is there like a degree you need to get into that? Or is it just kind of, dive head first and, meet with a mentor? Like what was that kind of transition for you going from college to, okay, this is what I'm going to do. I'm going to start my business here. And I guess, how does that all kind of work out?
Sure. I don't even think you need to graduate from middle school to be a mortgage lender, really, honestly.
That's good to know.
Yeah. Right? When I first came out of college, I started selling long-term care insurance in Milwaukee. And when you're 21 years old and look like you're 12 years old and trying to approach 70-year-old people to buy an insurance product that already had a bad name to it because of years before, it was a tough nut to crack, and making those 150 calls per day, 5 days a week. So they tracked everything. So that got a little old. So then moved from Milwaukee up to Appleton, and then worked for a finance company, like the high interest rate financing for like furniture and jewelry. And was there. And then one of my colleagues moved over from that division over to a different division in the same organization, and then said, hey, come check this out. And one thing led to another, and here we are 23 years.
Yeah, no shit. And are you originally from the Valley area, or where are you from?
Berlin.
Okay.
Berlin. Okay.
No kidding.
Oh, nice.
Small town. I didn't know that.
Yeah.
I'm learning all sorts of stuff about Tom today. We're just going to drill him with questions for the next 45 minutes an hour. But so I guess the one thing that I thought about, because like obviously mortgage lending is extremely important when it comes to buying properties and buying investment properties and everything like that. Now there's mortgage lenders. There's also hard money lenders. Is there, like, the thing in my mind, which I always wondered, when people are doing the hard money loans, like, and they're operating a fund-like structure, whatever the case is, do they actually need to be licensed lenders in the sense, or how, if you even know? off the top of your head? Because that's kind of what interests me. I'm like, well, if we ever pursued that, does someone need to hold a mortgage license, or I don't necessarily know how that works.
I would say I don't think so, but I'm not 100% certain.
Yeah.
Because, for example, like when you talk about the non-QM loans, like DSCR and
Correct.
some of those other programs, you don't need to have your license.
Oh, really?
Yeah.
Interesting.
I did not know that.
No, I didn't know that either. And then, like, when Joe and I were talking prior to you getting here, and it's like the biggest thing, especially for people who are self-employed or whatever the case is, it's not like getting that first property, whether they have a past 2 years of tax returns that are decent, that show a decent income. Like, what is the loan environment for that? Or like, what would you recommend for someone who's starting a business and they have aspirations to buy a house in the near future? Like, what does that even look like specifically for him?
Yeah, I was going to say that.
Because I know he's wondering.
I should be the one asking this question because that's the boat that I'm in right now. So
the earlier you can engage in a conversation with your lender, the better. It's just so you can roadmap that out, because make sure your credit looks good, what you have for assets, what you can qualify for. Because you want to make sure that what you want, from a price point matches up to what your budget is. Right? You always hear that champagne taste on a beer budget. Make sure we get those in alignment. So you're looking the right place, or roadmap it out so you can get to where you want to be.
Yeah.
And it's like from, I guess, Joe, what questions do you have on that? Because I'm not going to
I'm just kind of like curious then. So when I first, I went to my community first credit union, and I went to go show, my tax returns and everything. Now, with being in real estate and business, everybody tells you, try and deduct as much as you can, lower that tax bracket. So I had that mindset. I was lowering my tax bracket and everything. But then when I came to showing them, okay, here's my, tax return, I'm showing basically like 50% of what I actually made because of all the deductions and like mileage. I mean, mileage takes up a lot, which is really helpful if you own a business and you drive around for it. Definitely track your miles because it's a huge tax deduction.
Not tax advice though, but
I'm also not
just a tip,
not licensed. But I guess my question is, how do you, go about when it comes to someone that is deducting a lot of stuff, it's showing a lower amount, say 40,000 versus 80, 90,000 because of those deductions? How do you take that in consideration when running through figuring out, okay, how much can I lend this person? What's the best type of loan you can get and everything like that? Due to the, it does show it's like, well, they don't really make a lot on paper, but they really do.
Yeah. It's a tough thing. It's a double-edged sword, right? Because you want to maximize your deductions, but maximize the income you can use, especially when you try to want to qualify and buy a property, especially owner-occupied. So that's can be a very challenging dance. Because there are certain things we can add back, not everything, so we got to be cognizant. So that's why I would say if someone is self-employed or has a side hustle, to maybe get in touch with your lender a little bit earlier on the path, because they can help you roadmap that.
Guide
especially
you
if you're getting close to doing your tax returns and you want to buy in the next 12 months. I'd definitely sit down with them sooner or later before you get those tax returns filed, just to make sure they can look to see what kind of income you need to qualify.
Right.
Because if you've been in the line of work for 5 years and longer, we might only need 1 year of tax returns versus 2. So then we can roadmap that properly to get that income where we need it to qualify.
Okay. And is there other things like besides the, your, like the annual, money that you're making every single year? Like, are you looking at also the, properties that maybe someone owns? So like all the assets that they own, do you look at that on top of the salary and everything like that? Or is it just strictly, what the tax returns kind of say, and that's kind of what you go off of?
Well, it's part of it, because that would, I would say, more of a compensating factor, what assets you have and what equity you have there. But overall, the concern or issue is, ever since the meltdown, it's called the ability to repay, ATR. So they want to make sure that you could have $1 million in the bank.
Right.
But if you have $10,000 of income to qualify, they're more concerned about the $10,000 versus $1 million.
Gotcha.
That's interesting. Yeah, it's like there's so much stuff that goes into that. I like, even from being in a real estate agent for so long, that's where when when anyone ever asks me, it's like, well, what do you think I could qualify for? I'm like, I have no idea. I'm like, that is not my expertise on that side. So probably go ask a mortgage lender or whatever the case is, because it's like, and that's why I told you it's. And I guess what's the different stipulations between an actual mortgage lender versus like going to Community First? Because I told Joe, I said Community First, in my opinion, they have a lot stricter
100%
underwriting guidelines that I feel like most people do, but I don't know. And that's just from past experience from what I've seen.
Yeah.
It can be part company and part who you work with.
Okay.
Because I look at it as more strategic. I'll analyze stuff for clients and look at it from a different set of lenses where, for example, we had one that closed last month where they were turned down by another institution and we closed it in 3 weeks. Just we analyzed it differently and we're able to get them a grant on top of it for $2,500. So that was pretty cool. But I look at it as a strategy too. For example, I have some clients where they might make $200,000 of income.
Yeah.
But legally I can not include like commission or bonus and I bring their income down, for example, to qualify. So then I get them a better program, which means a better interest rate.
Right.
And then we also qualify for grants. So I think last month we did 5 or 6 grants for clients, free money.
Oh, wow.
That they got a closing for just taking a 30-minute phone conversation.
That's nuts.
Dang.
And it's you don't think of it, and that's why I probably have a conversation with Tom.
After
just
we're done with this, maybe.
I know, because that's where like you just don't know, and I think if you're actively going to be pursuing buying a place in the near future, like a personal residence,
and with tax season coming up, maybe I need to talk to my accountant and be like, hey, maybe we're not going to deduct as many miles this year.
Get the income up, whatever you need to. But what, Tom, like from what you've seen, because obviously you've been in the business for a long time, you've went through the highs and lows of things. What kind of separates the lenders that have longevity versus the ones that basically make it 5 years and then they're out of the business, or not even 5 years? Like, what in your mind, is there a few different factors, characteristics, or what kind of is the separation factor there?
Couple things I could say. Education. That and the passion to take care of clients and create that experience, because we want to give more than we get, whether it's our partners that we work with or our clients. Because I think the more you give, the more you can educate and empower people, the more will come back to you.
Yeah.
And do you feel like, I've noticed in a lot of your marketing, like there's a lot of video there's a lot of personal touch, which is like, there's literally hardly any people doing that regardless of the industry. Have you noticed a significant impact that it has on the actual relationships that you're able to form? Or is it just something that people might tell you after the fact, or maybe they've never mentioned a thing, but like I notice it from the outside looking in, and it has to make an impact, at least in my mind.
Yeah, I think it's more of after the fact. Like I was, for example, one of my backdoor neighbors, we had a campfire and having conversation, and I've heard stories where people are sharing it with other friends or family. So it's more of hearing it.
That's cool.
Yeah. So it's more of being present, top of mind, but adding value. Because again, more value you can put out there, people are going to digest that and then come back to you when they're ready for it.
Correct. And that's what I think as well. And that's kind of the approach that we were talking about the other day. It's like, I think the more you give people without necessarily expecting anything in return, I think you're just creating so much goodwill in the environment. And it's like, well, why? Like, okay, when I think of getting a house loan, who am I going to go to first? The person who's been giving me a shit ton of information, or am I going to go to this person over here that I don't know from the next?
Right.
So I just think that helps drastically. And with that, I guess the question that I had that was kind of top of mind was, when is the lender pays that commission only structure, at least on your side, or how does, if you can discuss that?
Honestly, it depends what institution you work for.
And that's what I knew that.
So I would say if it some of the more community banks and credit unions, it's definitely more salaried out. I'm guessing, and maybe a slight bonus. But if you're at a bigger bank or independent mortgage company, it's more commission, or 100% commission.
That's kind of crazy. And is that we were talking through yesterday, Joe and I, like the budgeting of like when you're commission only, because I've only been commission only. He started salary, now he's commission only. Is there a certain way that you've went about, because you have a hell of a lot more experience than we do, when it comes to that, like the monthly budget of, hey, I'm going to take care of these things first, or setting, like, I don't know if you've read the book Profit First at all. That's a good one. But Is there a way that you do things in your own life that you're like, hey, I know the business needs this amount of income, I need this amount of income, or how do you normally split that up, if you do?
Yeah. Usually personally try to put 8 to 10% in my 401k right away.
Okay.
Because being working for companies, it's W-2, even though we're 100% commission. So try to maximize as much as I can my 401k. Put that away, and then allocate additional funds for other investments as well. And put that away before we have any expenses figured out. So
so just savvy, just being savvy on a monthly basis. And that's what we were discussing as well. It's like, hey, even if it's not a ton of money, just set money away, park it, and then don't touch it. Try not to. And I think it'll just put you in a better picture. But how many kids do you have? Two. Do you have any desire for them to get into the real estate industry?
Or do they?
Or I should ask that. Well,
funny story is my son and daughter both moved to Florida.
Okay. They moved to Florida? Okay.
Oh, wow.
Dang.
Clearwater area. Yep. And my daughter and her boyfriend actually got the real estate licenses down
really?
there.
Oh, wow.
Dang.
So her boyfriend is trying to practice real estate down there. It's a little struggle, obviously not from the market, don't know anybody down there. So they're trying to break into the market, but so I guess they are interested.
Yeah, no kidding. Yeah. And how old are your kids?
My son's 25, my daughter's 21.
Dang.
Oh, wow.
Yeah. So they're really young. Yeah. What made them want to move down to Florida? Just the Hey, Joe, how old are you?
I'm 27.
Yeah, I'm 28.
It's not really young. I feel like
25 and 21 to go out and move.
Yeah, I guess.
We both still live in the same town that we're from.
Yeah, true.
I feel like I'm 24.
Yeah,
there you go. Yeah.
When I look at the college, when I look at the college people playing, I feel like I'm a couple years older.
Exactly.
NFL players are older than me.
Yeah.
Yeah, no shit.
I know. I just started thinking about that this year. I'm like, the guys that are playing right now are either my age or younger. I'm like, holy shit. Before I used to be like, oh my God, looking up to these guys, like they're all stars. And now I'm like, holy cow, these are now kids. Like,
or they're your same age.
Right?
Yeah.
Then you're like, God dang.
Then you're like, shit, what am I doing?
That's exactly what it comes to.
Yeah. Pretty soon you have a gray beard like Rodgers.
Yeah, exactly.
That's the other day I was looking and I'm like, is that a freaking gray hair in my eyebrow right now? Like, what's going on? What's going on? I'm too young for that. But okay, so they moved down to Florida and then they're in the business. Do you think, I guess if you were starting over today, do you think the real estate business in general has the most opportunity? Would you pursue, like I always, at least from my perspective, I look at all these different things and I'm like, real estate's great. Real estate sales kind of, it's a grind. It's like any commission only job. But there's all these other avenues nowadays, like solar sales or whatever the case is. Would you get into the industry again at 20 years old or 23 years old or whatever? Or would you pursue something else, you think?
Great question. Not knowing all the other industries out there, but this one's been I've been very fortunate. It's been very well to me. I would probably still do it.
Okay.
However, I'd probably do a different path where I'd try to be team up with somebody, a coach up front or better leadership initially, because I think your level of growth only goes so far based upon your leadership and the people you surround yourself with. So I think if I could have done that a little bit differently, that'd been pretty cool. But I think the other thing is I wish I would have started investing earlier in properties and just we always talked about it. It's kind of like the boy and a girl across the hall or across the room from each other at a dance and kind of eyeing each other up, but just never do it. That's how I felt for a long time. And it's just like the only asset you can buy with leverage is real estate, right?
Yeah.
You can put 5% down, for example, on a $200,000 property, which is what, $10,000.
Correct.
Where else can you buy a $200,000 asset for only $10,000, but get all the gains on a $200,000 property?
Right.
So
it's impossible.
So it goes up 10%. It goes to 220 now, right? So, but you only invested 10,000. So what's your rate? What's your gain, right? It's actually 50%, right? Or I'm sorry, 100 or 200%.
200%.
That's what
I was
right?
going to say.
200%, right? Because the fact is, you only put 10,000 down. You had 20,000 equity or appreciation.
Right.
It wasn't 5% or 10% appreciation. It's 200. So I mean, that's amazing on how you can grow your assets fast.
Yeah. And on top of that, usually you would have potentially like a tenant in there paying some of that mortgage, so you're even saving money there. So it's like Yeah. It's kind of crazy how much, I guess, when it comes to like storing money, some people think, oh, you need, I guess 20, 30, $40,000 to use for a down payment, but that's not always the case. Like that's some stuff that people kind of have a misconception and feel like you need to have all this, a shit ton of money basically to get into real estate, but that's not always the case. You can buy real estate even with no money down.
Yeah, there's several different options. Typical one, if you're owner occupying, if you're not a veteran or it's not a rural property, it's usually about 3 to 5% down, and again, you can get grants as well, possibly. So I mean, you don't need a ton of money now.
Yeah,
I know there's myths out there, 10, 20.
That's
down, but
And we were talking about that as well. And I told Joe, I'm like, oh, even if you say you have a really good month and you make a bunch of money or whatever the case is, I said, I don't think putting 20% down on a house, especially if you know how to make money in other avenues. I'm like, I don't know if that's a great idea. Maybe if you want to throw some more money at the principal on your loan every single month, that might make a little bit more sense. But yeah, I don't like when I bought mine, it was 5% down. So I'm like, that makes the most sense there. But I was thinking, are you familiar at all with like subject to purchases when you take over someone else? Yep. What are your thoughts on that from the the lender's side of things? And it's like, you're not necessarily the bank, but from the lending guideline side, like, would you personally buy one of those deals or no?
Would I buy one sub to?
Yeah.
Sure.
Okay. Because that's where I'm like, I know for some people they have this dilemma. Like I was talking. So where this stems from is I was talking to an insurance agent. We just bought a property sub 2, did a remodel on it. And the insurance agent calls me up. He's like, I've never heard of this. I don't even know if it's legal. I'm like, well, we've done multiple of them. I said, it's totally fine. I went through a title company, all of these different things. And then he was like cordial after that. But I guess, do you see any flaws in the practice from knowing what you know about the mortgage industry? Or is it pretty unlikely that anything wrong would ever come in regards to like due on sale or anything like that?
Yeah, the only thing I would say, the seller would want to obviously check with their servicer just to make sure everything is good on that part. But the other negative maybe for the seller, because I'm not very well versed in this, would be that might be held against them when they're going to try to buy another property right away, right? Because there's just not enough history there.
Right.
So that'd be the only dilemma would be from the selling perspective. From the buyer perspective, I don't see much.
Yeah.
As long as you do your contract correctly, right?
Yeah.
So.
And how does that come into play? Because it's whenever an owner asks me, they're like, well, what if, and I always make sure that they don't want to buy another place right away. Because I'm like, I was going to say, like, I don't know if you can. Is there ways around it that you are aware of? And I've heard like Pace Morby is obviously the biggest name when it comes to sub 2. And he says specific things. And I'm like, I don't necessarily understand that. But do you know on your side of things, Tom, how to avoid that from that red flag?
Honestly, I don't. But I did have a client that moved here from Oregon. And they sold the property sub 2.
Okay.
But that's my only experience I ever ran into personally on it.
Yeah.
Okay. But I know they moved back and they wanted to try to get the property and they wouldn't let them out of that contract. So.
Correct. Yeah, that's interesting.
Yeah.
That's really, really interesting. I don't know. I just like those are the kind of the questions that come top of mind when I'm thinking about that stuff. I'm like, I don't know the red flags. And then you try to pitch it. Yeah. And then if you're not confident in the pitch in any way, shape, or form, then it's like, well, the seller's kind of, or any individual can see right through that. But have you had any, and I'm sure you have, but have you had any like crazy experiences when it comes to the clients that you've worked with over the years, or what would come top of mind when I say that? Like just craziness, like whether they're people who are absolute lunatics or
too much.
Exactly.
There's a lot of them. One that just jumps out of my mind. I had a client that I'd done many loans for, and we're going to redo their loan, and they're very adamant they want an appraisal done.
Okay.
It's like really, against an appraisal. So, but we had to have one done. We couldn't avoid it, and because they're hoarders. Because in the basement they had basically stuff piled to like the light bulbs.
Oh jeez!
Holy shit!
It's unbelievable, and you can barely walk through the garage. It's like a little lane. But,
oh my gosh!
So I've personally never seen a hoarder one, but I saw a picture of it on a person.
Yeah.
It's just as disgusting.
Yeah, I was gonna say
Without having to go in there.
There's been some other crazies too that we've dealt with. You know,
And how do you navigate that? Like in your like, what's your tips and tricks for that?
Be patient with them. Be kind. I don't know. I guess it depends what part of the disc profile they got going on, right? So, but
Yeah, it's, I know, because we've had some that I'm like, and I just now, and maybe I shouldn't be like this, but there was one lady that called me at like literally at frickin' midnight. And I had listed, I went out on the appointment and we couldn't buy the house or whatever. The numbers were off, so I listed it for them. She called me at midnight because there was a showing that went on and someone must have turned down the heat or something. And on a Friday night, midnight, my phone's like, she dialed me 3 times because it was on Do Not Disturb. And I listened to it to the next morning. Then I called her at like 8 o'clock and I'm like, what the hell are you doing? Like what's if it's not and I didn't react in a great way there, and I don't, maybe I could have done it better, but I'm like, this is just ridiculous. I said, first off, don't ever call me at midnight again unless it's an absolute emergency. And even then, if it's like I'm listing your house, I'm not I have nothing other than that to deal with it. So that was, but I don't really give people the time nowadays to, with just the shit, because I just got so annoyed with it. And that's where, like, as real estate agents, like you work with a lot of real estate agents, I feel like real estate agents are worse than your actual clients.
Yeah. And I would say for you guys get more of the brunt than we do from a client, right? Because, you guys have the opportunity to forewarn us about any crazy shit. But usually we don't have too many instances like that, but you guys deal with a lot more of their personal stuff. Even though we deal with their finances and other things, you guys get more personal. Got more time with them.
And
definitely.
So like how have you been able to build out your business over the years, as far as marketing goes, as far as relationships go? Like what's kind of the catalyst to the success that you've had?
Yeah, I try to stay in constant flow with our clients where I conduct annual mortgage reviews with them.
Okay.
I usually start with, after the pre-approval, we'll get them in flow. We'll do weekly updates to our clients. We have them in database, and I'll do a financial update video for them every single week. Yeah. And then after closing, again, we do that flow where we follow up 7 days after closing, 30, 6 months, 12 months, and then every 6 months thereafter, either a call, email, text flow.
Wow.
That's kind of nice.
Yeah. Do you do that all yourself, or do you have a team that helps with that?
Pretty manual myself this year. My goal is to get automated a little bit better and maybe get a VA to help out with it too.
Yeah. I was going to say that, I mean, just from hearing what you just said, like that's a lot of work to me, but and that's all for just one client throughout from the start to finish, and even past the finish line, you're still, checking in on them. I think, I mean, it takes a lot of time, but stuff like that definitely makes a difference for a homeowner, having that reassurance and having that consistent guidance. So yeah, that's really awesome that you do that.
Yeah.
And go ahead. Sorry.
Like even once they're pre-approved, usually we're doing weekend or biweekly weekend text to them to say, hey, if you need help, let us know. Yeah. So, but with the market taking longer duration wise to get a property, we're trying to expand that out because no one wants to hear from you every week if there's no property in the market.
Exactly.
So.
Right. Makes sense.
It gets frustrating. Yeah. And that's like from the fallout that happens with buyers. And I know when I was showing more people houses, I don't anymore, but when I was like, that was the thing. It's like, hey, we're making these offers, we're not getting them. Like we're done buying. We'll wait for whatever. Now is a good time, but back then necessarily wasn't the best.
Yeah, like pre-COVID, if you had a buyer that wanted to buy and was pre-approved, you'd be, 99% of them are going to buy within 2 months. Yep. And they're going to be under contract, maybe 1 or 2 offers. Yep. Now it's like they could be out there for 2 years. Right? So
that's freaking nuts.
Yeah.
And it's such a long sales cycle. When you think about that, like that, and that's why I asked the question before of like, would you get into a different industry that has a little bit quicker thing? And that's even in my mind, I'm like, okay, real estate agent in 2015 through 2019, it was pretty easy. And I'm like, I would almost rather have a buyer because I know they're going to buy something versus a listing that I don't know necessarily when it's going to sell or how quickly. But then 2020 through whatever the last few months, it's just been listings are the bread and butter of like everything. So I think it goes in waves without a doubt. And that's where if someone's deciding they're listening or watching this and they're deciding what to do, I don't know. Like I don't know if it's real estate agent, mortgage lender, real estate investor, or a combination of all the above. So,
well, don't you think you could, as a real estate agent, you can fluctuate from like when it goes from a seller's market to a buyer's market, and then just basically go pinball and go, okay, now it's a buyer's, so I'm dealing with just buyers and sellers,
ideally,
and just keep doing that versus
pivot your marketing strategy.
Yeah.
But have you ever worked with home buyer before? Because
No.
I'm telling you, it is miserable.
Yeah. Talk about mileage.
Yeah, no shit.
Kidding. Yeah, no,
So,
I've heard the stories.
Yeah,
that
it's
you've
like you're
had,
just,
so.
and that's why, like, and even from the lending standpoint, I talked with lenders in the past, and like the nice part about lending is some of these people aren't even meeting the client prior to the actual closing table or whatever the case is. So it's like you're not out driving. You can sit in an office if you desire that, or you can meet up with other real estate agents or go talk in front of the brokerages. But as a real estate agent, it's like it's a constant hustle. And I think people getting into the business, they don't understand that. And then it's like, hey, it's 3 months or 6 months or 9 months without a payment or a paycheck. Like that's a freaking hard pill to swallow.
Yeah, that is.
And kind of to what you said before, the team side of things, I think is if you're a newer person, like utilize whatever resources you can.
My professional opinion, if someone's newer in the business or has been in the business and just not getting it, interview teams, because they have systems that can help you scale and structure, but also opportunity for leads. And my opinion is that someone says, well, I get 80% commission now or 100% commission. Well, what's 100% of nothing versus 50% of a closed loan?
Correct.
So, I don't know. So in my opinion, there's seasons for that, right? So I mean, you can grow out of a team at some point, but I think a team is not a bad thing for people to start out with.
And that's I agree. And it's like a guy was in the office, in this office not too long ago, and he's like, "Yeah, I just quit my job to become a real estate agent." I'm like, "That's like a tough thing." And then you have like all this other stuff going on, and then it's the stress. Again, especially when clients sense okay, you're stressed, you want them to buy a house because you need money, which is understandable. But then that pressure comes off, and it just never leads to a good sale.
Yeah. Right.
And I'm always been in, like, if we're in a desperate scenario to get a property, we always make mistakes, and then
definitely. And you can just sense it too.
Oh yeah, exactly.
Just feel a little bit, you feel the push, I guess, that behind their voice and their tonality and everything. But I got a question, I guess, with like interest rates and everything like that. I guess, what are you seeing right now? Are you predicting like interest rates are going to keep on going down, lower, higher? I guess right now, are they just going to be staying kind of steady?
Yeah. It really depends upon some of the economic reports and the national debt. There's a lot of things, a lot of moving parts there. So right now, an economic report came out today, very non-bond friendly. So we saw some worsening rates today, but I think it's going to be overall choppy the first half of this year, especially first quarter. Maybe late second quarter, we could see some improvements, but I think it's going to be upward pressure on interest rates. And I was listening to recap of today, and they were talking that we're going to see rates higher for longer, that they feel we could be pushing, this might date our recording, but going mid to upper sevens possibly at some point. But I feel like we'll be in that 7-ish range for a while, and then maybe the back half of 25 we'll see a little bit better rates. Maybe we could hit that 6.5, maybe 6.25, but I think it'll be like the mid 6 range. First rate cut of the Feds last September in 24, we were very optimistic we'd see the low 6 and maybe upper 5s. But now with a lot of differences in what's happening here, I think we'll be higher for longer, and maybe in 26 we could see some improvement.
Yeah.
Okay.
And do you think that discourages people, or at least from your side of things, what does that conversation sound like when clients are coming in and it's like, hey, I want to buy my first house, or I want to buy the next house, and then you're sharing kind of the financial outlook of things, where interest rates are at? How does that conversation normally go?
First-time home buyers, it's a mixed bag, right? Because it depends on who they're talking to or what they're digesting. Because if you think about it, in the last 20 years, if they only looked at rates for the last 20 years, I mean,
it's insane.
It's been basically pretty much under 6 the whole duration, except the last couple of years. But and we've dropped under 4% 4 times. It's all been in the last 20 years. So people only know low rates. But historically, obviously, we're average. But I think the big thing is, incomes aren't keeping up with the rates and the values of the properties and the cost of goods going up. So it's putting a strain on people. I mean, there's definitely pressure there. But I tell clients, it's like, forget about what rates are. We got to figure out what your payment is. You don't pay your payment based upon an interest rate. You pay it based upon the payment. So we got to figure out what you can budget for, and let's see if it makes sense. Maybe it doesn't make sense based upon your budget, what you have to afford to buy right now. So I always look at it from that. I always want to leave a payment, not rate, to see if that payment aligns for where their budget is.
Correct.
For a price point to figure out if we can buy now or wait to wait.
Gotcha. That's interesting because it is. I feel like that would be the thing. It's like it's totally out of your control as a lender. You're just it's the product.
Yeah. But and I think our industry always trains us to ask, "What's your rate?"
Yeah.
But to me, it's not about rate because the lowest rate with the wrong strategy is not good, right?
Exactly.
So we want to make sure we put you in the right strategy. But not only that, we just got to make sure because the rate could be 2%, but the payment's too high.
Yep. You can't afford it.
Right.
Like you have to come back down to reality. For a second.
So I guess like what do you tell maybe new home buyers that are come to you and they're like, hey, like I see the interest rates are at 7% or whatever. Like I might just wait till they come down. Like, do you think waiting is really the solution to I guess the interest rates and everything like that? Or because me personally, I feel like it's hard because you see the interest rates, you see, okay, it goes up and then it comes down. You're like, oh, maybe if it goes down a little bit lower, I'll look into it. But then, it goes back up. But I don't know. Yeah. What are your thoughts? I guess people come to you with that sort of question.
I think it all depends on what makes you sleep good at night, number one. Because if buying a house and making a payment of X amount is going to keep you up at night, don't do it.
Yeah.
But if you are comfortable and you can qualify, let's do it now. Because obviously as rates are higher, there's less competition. So you have the ability to get into a property, perhaps less competition. Maybe don't have to bid it up and pay above asking. Maybe a little slight discount off the price point. Throw in your inspections, and just other things you couldn't structure your offer. So to me, now is the time to do it if you can comfortably qualify. Because I always tell my clients, I can fix your rate. I can't fix you're going to pay for a property. So as rates come down, you're going to pay 10% more. And let's say the rate came down 1%, well, that's only about a $50 savings. Again, depending upon price point. Where if you bought now and we took advantage of that 10% appreciation a year from now and that lower rate, now we're talking about $200 savings.
Yeah, that's true.
So that's why I'd rather get that appreciation. Right? Because earlier we talked about that appreciation. And owners of homes versus renters was like 40x. Differential on the net worth. So to me, it's like, let's start early as we can to build that net worth for you, especially if the rates are a little bit higher. Let's beat the competition to the market, get you in that property. Because not only that, maybe at that point, maybe that property was not the right fit, but when rates come down, well, now you have equity in there. You can sell it and take that equity and move on to another property.
Yeah, definitely.
I know.
Or you keep that property and then you buy the one you want, and then maybe because you've been in a year, now you keep it as a rental.
There you go. Yeah.
I know. So long story short, Joe, you need to pull the trigger.
All right. Tomorrow I'm buying a house, everybody. I don't know where, don't know how.
You're going to make it happen.
Buy a 5-bedroom and house hack.
Exactly. Hey, Troy has one.
Yeah.
Right on campus. Why don't you just buy that from him?
No. I don't want to go back. Because I went to UWO, so I lived on campus, and it is a college house. This is already too close where our office is.
Brings up memories. Brings up memories. So it's obviously we kind of went through a little bit of the backstory, but the one thing that we haven't gotten into is the real estate investment side. So for you, Tom, what do you think was I'm going to use the term mental block prior to getting into it sooner versus taking however long that it took to buy the first investment property? Like in your mind, have you thought through that at all, or what were the?
I think it's just educating and applying it, right? It's just picking up the book or start watching YouTube videos on investing techniques and just learning the strategies. So now I'm doing more of a deeper dive in and reading some books and asking for suggestions on podcasts and just trying to educate myself each and every day.
Yeah, and I think it probably builds confidence is what I would assume. And that's, I don't know, it's like anything. You just, when you start doing it, pursuing that first deal or the second deal or whatever the case is, I think so many people get nervous. They get so tied up about all the bad things that could happen that it keeps them from taking any sort of action. And I think even if, kind of what I was telling you on your flip properties or whatever, it's even if you buy it and maybe you were projected to make $20,000 and you made 10, it's still freaking $10,000.
$10,000. It's better than zero.
I know.
Well, then you have other tax benefits, right?
Yeah.
On top of it.
So it's like, and people just, I think they discount that. And like real estate is one of the things that realistically it'll never go down to zero because you have the land value, you have insurance costs, unless you have a shitty insurance policy.
Burn a place down.
Exactly. I told them about the house next door.
Oh gosh.
But with that, I'm like, you're pretty well insulated. And there was one guy I was having a conversation with once, and he was buying a place on campus. It is a college rental. He's like, well, what about this or that or whatever? I'm like, I said, there's always going to be what ifs that can happen. I said, but you're buying it. The tenants are in place. You literally have a lease signed for next year already. Like, what's the worst that can happen here? Like, maybe get an inspection of the place. If all those boxes are checked, everything looks good, then like whatever. It's real estate, I think, is a long-term play versus generating higher income. But what are your thoughts on that? Do you think people can make obviously people can make a decent income, but like from the investing side of things, are you taking more of a long-term approach, or what are you hoping to gain out of that?
Yeah, definitely a long-term. Want to create some passive income for the future. So not looking short-term on it personally. Obviously, some people do with the flips and burrs and all that, but my personal strategy would be more of the long-term, and let's acquire properties and hold them unless the opportunity comes up where you buy a property and there's a great if someone approaches you on it, then and if someone's like looking to get investing and not sure, just have as many conversations with people that that are doing it.
Right.
And if you come across an opportunity, run it by them and get their advice, and maybe ask them to partner, because maybe someone's willing to partner with you that has some expertise, and that's always a good way to dip your toe into it, right? So you can learn, maybe give up a little equity position. However, that might be worth the education that you're getting, right?
Exactly.
And I would agree with you there, because it's like there's certain things that you run across, and you're like, I'm either going to really F this up, or maybe I can find someone to work with that just makes it a lot smoother. And I know even on our side, like there's certain areas that I'm not familiar with. Hey, let's just work with this person, get a little bit more familiar, builds the confidence. It leads you into different things.
Yeah. You never know where that relationship or partnership will go, right? Because now, like, we gave up equity in the one that we partnered with because they found it. And we're going to be doing more investment opportunities together. So, and there's been a good friendship going on. So, you never know where that's going to lead, right? So, I think if you find something you're not sure, bring it to somebody, get their opinion, get them involved, because you never know where they'll take you.
Yeah. And what I've noticed is there's a lot of other real estate investors that do the same thing that we do, that are willing to help out anybody that's willing to basically ask. Like, if someone were to walk in and be like, hey, I'm looking to get into real estate, can you help me find my first deal? More than likely we'll be like, yeah, let's help you out. And like, we don't have any issues with that. A lot of people don't. I think a lot of times some people that are getting into it feel a little intimidated, seeing the volume that some individuals are doing. But at the end of the day, everybody wants to help everybody. At least a lot of the people that we hang out with. Not everybody's like that, but majority I've found, everybody just wants to help out and educate the new ones and show, how to do it. And like you said, it's a lasting relationship that can benefit both parties and last a lifetime.
I don't think you're ever too young or too old to get investing either, right?
Never.
So, because Grant Cardone started.
He was older.
Right?
So it's and look at what he's done in the last 10 years, 15 years. Yeah, it's insane. And that's I don't, and I think it does come down to the relationship component a lot, because the more that we have people in and recording a podcast, we're sitting down in a typically a fairly intimate setting. We're close. We're talking about things, different nuances, hearing everyone's opinions. But you get to know people at a different level. They're like, hey, I didn't know that, or I didn't know this, whatever the case is. And then you can shoot the shit or talk about things after the fact. But I don't know. I think the relationship side is so important. And the more that people focus on building a relationship, and I think you do that amazingly in the lending side of the business, because it's a personal touch that's added. And I don't know, I wanted to commend you on that, because it's noticeable. But I think it'll lead to other opportunities in the future.
And more doors are open for you, not maybe for the other person too, right?
Exactly. And you're more approachable.
Right.
Because otherwise you look at some people who are in the real estate industry, or any industry for that matter, and they just don't, it doesn't feel like you could reach out to them and never even get an acknowledgement. And I think that's to a detriment because then people don't think it's achievable. And even though you're putting out all this content about, oh, here's what I did, or here's all the different things that I've done. Yeah. Like, is there actually a basis that you can go off of?
Or is it more of a facade, right?
Yeah, correct. Exactly.
And that's where I even look at, like, to bring up that Pace Morby again, he's extremely successful financially, but he is also extremely approachable. And I think that fact in and of itself has allowed him to build and amass such a community that he's helping all these different people, whether they're brand new or they have 20 years of experience. And I think building the community around that is incredible. And I think it'll lead to other investment opportunities or business opportunities or whatever. But have you ever, the last thing, because I know you probably talk with Josh and Derek quite a bit, but have you ever thought about buying businesses at all? Yeah. Like I know Josh is.
Yeah, we're talking about it.
Are you? Yeah. Are you actually? Okay, I didn't even know that. Yeah, that's kind of
nice.
So because we put together like a buy box. With the packing order is what we want to see of it. Yeah,
I didn't even know that because I know Josh always says that, and I'm like, I need to learn how to run this business.
I'm the same way. Well, you can. Yeah. Can't you buy? You can buy businesses that you don't really have to do as much to them. Like obviously you stick a lot of money into it, but
how much labor or how much equity or time you want to put into it. Right?
Exactly. Yeah.
It's it just depends what you want to do, because one of our goals was not we want to put X amount of time or less into it, right? So many hours per week between the 2 or 3 of us, depending on how we structure it. So and it has so much revenue up front, and what where's the growth component, right? Yeah. What are they doing now versus what we could do differently to expand it?
Yeah. Are you guys looking strictly in, I guess, the real estate industry or anything?
Yeah. We have a couple different ideas, but we're open minded, because to me, you don't know what you don't know, right? With anything and everything. So keep an open mind and look at each opportunity, see what presents.
Do you? And I was listening to a podcast the other day, so that what kind of has my mind on this right now. But are the returns from buying a business side of things? Did those seem like the multiple that you're buying it at, generally speaking, would outperform real estate on average? That's kind of a loaded question.
Yeah, potentially. I think there's a lot of factors that come into it.
Yeah, of course. Yeah,
definitely potentially. Yeah, because we're in our group.
The
Wednesday morning, there's the gentleman that does the business brokerages, and he comes across a lot of deals. And one, he's like, you wouldn't believe this one. I think it's like the milk powder, the whey powder, just a boring thing, but it's like
just a cash cow.
Yeah, cash cow.
That's insane.
Yeah. So it's like you just never know. That's why you want to keep open mind too. I know on different business, because it's like, you wouldn't have thought about that one, but there's opportunities like that.
Yeah.
That's really cool. And if you don't know this, then so we can end here. But can you get financing for that, or is it mainly counting on is it an SBA loan, or is there private sources of finance, or how does that normally?
I mean, there's several different ways to get commercial financing. SBA being one of them, but then there's some private ones too.
Okay.
I see more and more opportunities in the commercial space for people to get financing through various outlets.
Yeah.
Kind of pivoting from there. So, for example, there's fix and flip loans out there now where you don't have to go hard money. Yeah. There's a sister company of a DSCR company that does them now. So I just found that out about a month ago. So there's opportunities to help investors too, where instead of getting hard money, it's in between a DSCR and hard money for the terms that they can get that fix and flip loan.
Interesting. Very, very interesting.
I don't really know about that either. I didn't. I was just saying, I'm like, does Cardi even know about that?
No, I have no idea.
I didn't hear about that.
Well, we'll talk about it later.
I know. That's what I was about to say. Well, we'll wrap it here. I know you had I don't even know what time it is, but we can wrap here. Yeah. I appreciate you coming on, talking, getting to know you a little bit better. If you guys enjoyed the content, hit the like and subscribe button down below. We appreciate you watching as always, and we'll see you in the next one.